Friends and colleagues, it's 2:17 a.m. on January 16th, 2026. I'm here reviewing market charts, and I'm about to discuss something many in the precious metals space refuse to address. I'm going to discuss exit strategies, I'm going to share the indicators, the signals that suggest the peak is approaching, and when it's appropriate to transform your silver holdings into realized gains. Now, I understand what you're considering. Hold on. This is the same individual who advised us to purchase silver to take it to $100, perhaps even $200. Why are you now discussing liquidation? This isn't deception. This isn't about assisting financial institutions in accumulating positions. This is the full narrative. Acquiring silver is only half the equation. Without understanding when to liquidate, all your profits could disappear. Life-changing wealth can manifest in your portfolio and vanish equally quickly because you weren't ready for the summit. Let me be direct. We haven't reached the peak yet. Not by any measure. Right now, in middle January 2026, the underlying factors are solid. Commercial demand is accelerating. Retail participation is measured but engaged. Economic trends are favorable. And market psychology is still balanced. This isn't the time to liquidate. But if you aim to safeguard your profits and prevent the downturn, you must learn how to identify the red flags and respond decisively when that moment arrives. Market peaks don't occur when everyone is fearful. They occur when everyone is ecstatic, when the headlines are exceedingly bullish, when even the doubters have turned into supporters. That's when price action deceives people into believing values will climb indefinitely. And it's also when the biggest losses materialize. Silver will climb, summit, and then drop sharply, rapidly, and mercilessly. If you lack a strategy, you could surrender everything you've accumulated. Here's the approach I utilize. There are 8 red flags that suggest the peak is developing. When all 8 converge, that is your cue to begin liquidating. First, retail frenzy. When ordinary investors are rushing into silver, waiting outside coin shops, accepting enormous markups, that's a peak. Right now, January 2026, U.S. Mint Silver Eagle transactions are strong, approximately 75,000 ounces per day. But that's not frenzy. Ultimate frenzy will be beyond 5 million per month with queues at every shop, markups $20, $30 over spot, and digital platforms saturated with silver content from everyone, including your relatives who never participated before. Second, mainstream outlet conversion. The press currently addresses silver carefully. Commentators debate whether the advance is legitimate. At the peak, every platform will be optimistic. CNBC, Bloomberg, WSJ, NT all will frame silver as the clear, no-risk opportunity. When the critics vanish and the press collectively endorse silver, the simple profits have been captured. The peak is approaching. Third, speculative contracts at limits. Major speculators and investment firms monitor silver contracts intensely. Right now, net bullish positions are high but not excessive. At the summit, speculators maintain historic positions, 80,000 to 100,000 agreements. When everyone who desires to purchase has already purchased, the only path remaining is downward. A rapid liquidation initiates a chain reaction that pushes values dramatically lower. Fourth, commercial buyers withdrawing. When silver becomes excessively costly, commercial purchasers cancel initiatives, replace with alternative materials, or postpone manufacturing. Currently, corporations are rushing to lock in inventory, but when values reach $150, $200, commercial demand will diminish. Reduced commercial purchasing indicates the advance is overextended and susceptible to reversal. Fifth, fresh production launching. Silver operations are expanding, but extraction requires time. When significant operations begin delivering, the shortage gap narrows and values lose drive. Look for reports about substantial operations in Mexico, Peru, Canada, or Australia commencing delivery. This is a vital indicator that the uptrend may be culminating. Sixth, regulatory involvement. At extreme peaks, when silver triggers financial disruption, regulators may respond. National reserves could be deployed, trade restrictions removed, or customs regulations modified to stabilize the market. Regulators can't manipulate markets indefinitely, but their measures can create instability and eliminate uncertain participants. Seventh, technical collapses. Graphs indicate peaks when exponential advances reverse. RSI above 90 extended Bollinger Bands or pattern formations like shooting stars and bearish engulfing candles suggest momentum exhaustion. A severe decline 15% to 20% in days is the validation that the summit is developing. Eighth extreme, psychology exuberance. Psychology measurements, digital platform discussion, and community engagement will display extreme optimism. Everyone forecasts silver at $300, $500, or higher. Critics are absent, final purchasers have committed, and the market is depleted. When anxiety of missing out achieves its maximum, the only trajectory remaining is downward. Once these indicators converge, you don't liquidate everything immediately. You exit methodically. Separate your assets into 5 portions, 20% each. Liquidate progressively as red flags intensify. Portion 1, liquidate 20% when silver exceeds $100 with 3 indicators visible. Secure profits while maintaining participation to additional advances. Portion 2, liquidate another 20% at $125 with 5 indicators visible. Your aggregate sold is 40%, still benefiting from appreciation. Portion 3, liquidate 20% at $150 with 7 indicators visible. You've protected the bulk of profits. Portion 4, liquidate 20% when all 8 indicators appear irrespective of value. Now you've liquidated 80%, maintaining a minor position for a possible exponential jump. Portion 5, liquidate the remaining 20% at the technical collapse when drive evaporates and silver plummets 15-20% in days. Liquidate entirely. What do you do with funds? Currency is most secure, brief duration government bonds, or a protected savings alternative. Spread into gold, raw materials, or property to maintain wealth, or adopt a contrarian position, shifting into underpriced holdings that others are overlooking. The most bold yet profitable approach is waiting for silver to decline following peak and reacquiring at reduced values. Discipline here multiplies wealth without extra funds. Past events demonstrate the price of neglecting liquidation approaches. In 1980, silver reached $50. Those who maintained expecting $100 observed their wealth diminish as silver dropped to $5 over years. In 2011, silver summited near $49, then crashed to $26. The principle is straightforward. Without a strategy, profits can vanish and missed opportunities multiply. Here's the 2026 timeline. Stage 1, January-March, gathering. Informed investors are purchasing, commercial demand accelerates. Retail participation increases but is not frenzied. Anticipate 75, 110. Stage 2, April, June, widespread acceptance. Press begins addressing silver optimistically. Retail rushes in. Initial red flags emerge, psychology transforms. Values could achieve 110 or 150. Stage 3, July-September, exponential stage. Silver goes vertical, 150, 175 plus. All red flags appear. Implement portions 3 and 4. Stage 4, October-December, summit and crash. Silver peaks $160, $200 depending on frenzy strength. Technical collapse happens 30-50% declines in weeks. Liquidate completely. Stage 5, 2027, market stabilizes, values retreat. Psychology crumbles. Uncertain participants shake out. Disciplined investors await the following gathering stage. Action steps. Now establish your liquidation. Framework, identify dealers, IRA withdrawal procedures. Cost markups. Don't delay for $150. Monitor assets in a document. Separate into portions and establish criteria for liquidations. Track red flags, weekly coin transactions. COOT documents, commercial updates, psychology measurements, rehearse liquidating minor quantities to become comfortable with processes and minimize anxiety during actual liquidations. Prepare psychologically for disappointment. You'll experience it when values climb after liquidating. Embrace it. It's the price of structure. This is the discussion no one else is conducting. Everyone advises you to purchase. Few advise you when to liquidate. Markets are rhythmic. Life-changing wealth derives from purchasing low, liquidating high, and cycling the process. Right now, we are in the purchase stage. Underlying factors are optimistic, technical favorable, but prepare for the liquidation. Silver may achieve $150, perhaps higher, but the uptrend will conclude. And without a strategy, you risk surrendering it all back. The liquidation approach isn't pessimistic, it's pragmatic. It's how you safeguard profits, maintain wealth, and arrange yourself for the following cycle. Prepare now. Implement later. Adhere to the portions. Track the red flags. Don't allow desire or FOMO surpass structure. This is how life-changing wealth is constructed. Purchase, prepare your liquidation, implement, and cycle. Stay alert, stay structured, and recall, the objective is not to possess the most silver. The objective is to generate the most profit. And you only accomplish that when you